Joining us now to talk more about the impact of the Nasdaq shutdown on investor confidence is Richard Repetto. He's a principal at Sandler O'Neill. Richard, welcome. Good to see you. Can today's trading systems really be trusted? We asked at the top of the show. And is my money safe?
Well, I think today's systems are strong, but these little glitches are blips that we're having. I think is going to bring more, let's just say, oversight from the regulators and a greater effort by the industry to reduce these problems that we're having.
For investors at home watching all of this going on and listening to our news, they just throw up their hands, I'm sure many of them, and say, this keeps happening. And that's why many of them are staying away from the stock market. Is that just the way it's going to be? Or is there anything that can be done to simplify the system so that we can keep the individual investor in?
Well, I think the industry and the regulators are going to take a hard look at it this time. I think this is a call to arms, so to speak. But the one thing I'd sort of highlight is, at least with this one, it doesn't appear like there was a lot of damages or the monetary damages to people because everybody was shut down. It wasn't like you were held in position while the stock traded away from you. The stock just didn't trade. So it is a crisis of confidence, but as far as the damages, I think that they were limited in this problem.
What if I'd put in, Richard, an order to buy or sell a stock right around that time? What happens to me? Did that order ever get executed?
When the system shut down, I think that was the quote period when they started back up, what Bertha was explaining. When they started back up, they allowed people to cancel their quotes or orders or to put new ones in. So they allowed for that 15-minute window so people could get, reposition themselves if they wanted to. So you weren't going to get stuck with an order that you put in at whatever time this happened, 3 hours earlier, and still have to live up to that order 3 hours later. There was that period, that grace period.
Richard, let me ask you a little bit about the business of being in the exchange business. We know that there have been glitches at both the New York Stock Exchange and also the Nasdaq, maybe more at the Nasdaq. But this also knocks down business confidence in the exchanges. And so there are a number of big companies that want to offer their stock to the public. Twitter, a lot of talk about Twitter offering their stock. Do you think that they would feel more comfortable of listing at the New York Stock Exchange rather than Nasdaq after today's episode?
I mean, you have a good point. I look at this as an industry issue because it could happen to anybody. And just so you know, the problem was with this price dissemination stream, in complex terms, it's called the UTP SIP. But NASDAQ operates that for NASDAQ-listed stocks. The NYSE operates it for NYSE-listed stocks and the ETFs as well. So it could have happened to anyone. What the industry needs to do, they need to go through this airplane accident, analogy where when there's a problem, that you have to really take a serious look. The Transportation Board comes in and investigates. Here, the SEC or a regulator needs to come in and take a hard look, as well as the industry come together to put in the remedies and the fixes. It just doesn't feel like there was a whole lot done after the flash crash, and I think that's the level of response that's needed to regain the confidence that you both speak of.
Richard, thank you very much for joining us tonight. Richard Repetto of Sandler O'Neill.